welcome to this special CNBC Africa broadcast. I'm Nozi Pombanjwa. We're coming to you from Washington, D.C., where a new and ambitious target has been set at this year's spring meetings hosted by the World Bank and the IMF, and that's universal financial inclusion by 2020. But with no access to financial services, is this target realistic, and can this target be achieved? We go in search of the answers.
Each spring, over 2,000 global participants from both the public and the private sector, media, academia, and civil society gather in Washington, D.C. for the spring meetings of the World Bank and the International Monetary Fund. At the heart of this annual gathering are various committee meetings focused on the global economy and international development, which includes in-depth discussions on the state of the financial markets. A hot topic on this year's agenda was financial inclusion, especially as it relates to the African continent.
Financial inclusion has clearly gained in importance within the context of financial sector reform over recent years. In 2009, the G20 put financial inclusion on its reform agenda as it acknowledged its importance for growth as well as for building inclusive economic systems. So if you look at the most recent reform efforts around the world, there are over 50 countries globally that have made commitments towards greater financial inclusion and have actually set specific targets for themselves to build those inclusive financial systems.
It's estimated that 2.5 billion adults in the world do not have access to formal financial services. With 200 million businesses lacking access to the finance they need to grow, in sub-Saharan Africa, less than a quarter of adults have access to formal financial services. And in some countries, the level of access is below 5%. With these numbers in mind, in 2013, the World Bank Group Forum launched the development goal of universal financial access by 2020. As part of the journey towards this goal, the World Bank launched a number of financial inclusion initiatives with public as well as private sector partners.
You know, the private sectors definitely are essential, but there has to be a partnership between different private sector players. I mean, from agriculture companies together with banks, that they actually work together to give the right, for example, a loan or insurance to farmers, smallholder farmers. And what is very important is the partnership with the public sector. Public sector has a very important role in promoting the right environment for private sector players to do this in a sustainable way, and they actually can reach even the last mile. And I think the public sector is not only a question of rules or regulations, but also sometimes where the business case for certain banks or financial institutions is not there to actually assist that.
Throughout the world, Visa is targeting opening accounts for 500 million new people in partnership with our financial services clients. So you're seeing, along with the other commitments that were made today, a tremendous leap. By 2020, the goal is 100%.
Right.
So we're certainly hoping that that goal can be met, and we intend to play a real significant part in doing so.
On the African continent, technology has started to play an increasingly important role in the financial inclusion agenda. With the advent of mobile money and similar mobile-based products, saving and purchasing power can now reach the masses, particularly those in rural areas.
I think on the ground we're very excited about the opportunities connected to mobile technology. We see the huge uptake of financial services through mobile. So we're supporting, with a partnership for financial inclusion at the IFC, an opportunity to work with mobile network operators to increase financial services for the unbanked, but we're also working with microfinance institutions that are partners of the IFC to invest in alternative delivery channels, look at product development, and also expand to areas that are underserved, so more rural communities.
One thing that we, where the technology has proved its added value has been in sub-Saharan Africa, and we've seen very good examples not only in Kenya but also Tanzania, in how we've actually increased financial inclusion tremendously thanks to mobile phones. we cannot forget that basically distribution is very expensive in Africa. We don't have sometimes the infrastructure, the costs are very high, we have a lack of identification of the people in order to open accounts, and technology is helping us to address these issues.
Africa is a leading innovator in the financial inclusion space, particularly East Africa, where M-Pesa, the story is very well known, but it's actually radiating out from Kenya into other markets. Tanzania recently reported a big jump in access to financial services in that market, and that's thanks to a very competitive mobile money landscape.
Like Kenya, Tanzania has also taken a leading role in the mobile money industry in the East African region. It recently became the first country globally to bring together the mobile financial services industry by agreeing on set rules and standards for the interoperability between different providers. The country's success story, however, still raises questions about regulatory standards and frameworks on the continent, on whether they're conducive towards the goal of financial inclusion.
If you look at some of the markets in Africa, the ones that tend to be more open on regulation and allow innovation to take place before they try to control it, that generally has led to a much more rapid uptake of mobile money. Sometimes there are events that spur greater uptake. You have to find something that people want, right? And so Kenya, M-Pesa really took off at the time of the elections, when there was trouble over the elections and people had not as much choice about sending money around. So it was the spark that kind of made it take off, and then people realized how useful it was. I think in Tanzania it's been a slower ramp up, but then it's taken off very quickly, and we're seeing a lot of uptake in financial services there. And as things like interoperability come online, that's going to take a lot of the friction out of the system. It will become even more easy to use mobile money.
You've got to have a welcoming regulatory environment, at the same time one that's sufficiently protective of the people and sets up the right framework so that people will trust the system, because trust is critical to financial services. And we also partner with the regulators to bring our experience and expertise into the regulatory community so that the regulation will really work for everyone.
Clearly the central bank plays a key role, but Ministry of Finance and other ministries have a key role to play to really leverage all of the benefits that better and more inclusive financial systems can yield. So one example, if I want to really have more efficient delivery of social transfers, this is very difficult to achieve if you are trying to do this with cash payments.
Right.
So if you have the rails in place that you can actually make those payments via an account, whether it's mobile, on a card or in a bank account, it is much more efficient, reduces graft, and it gets much faster to the beneficiaries who really need the funding.
During this year's meetings, the latest Findex data was also released. Though universal financial inclusion targets are still not where they need to be, developing markets, and in particular sub-Saharan Africa, have seen positive results.
Africa is an exciting story. It's a story where mobile money accounts is showing its great potential. Over 60 million adults on the continent are now using an account on their very simple mobile phone, using basic text, SMS messaging to make and receive payments. They're able to deposit and withdraw money at their mobile phone agent. We're seeing tremendous potential in 5 African countries: Cote d'Ivoire, Somalia, Uganda, Tanzania, Zimbabwe. More people have an account with a mobile phone provider than with a bank or financial institution.
Africa, however, is not the only continent making strides in the financial inclusion space. Fellow emerging market India has also made significant inroads in getting its population banked.
We've been able to do 33 million accounts in the last 6 months alone, of the 75 million financial accounts, inclusion accounts that we have. Overall in the country, 135 million accounts opened, 49% would be accounts held by women. So though the challenges are in the numbers, I think it's still a very doable job. If you get the product design right and the delivery right, things can happen.
Countries within sub-Saharan Africa are generally patriarchal, with men historically having better access to banking and financial tools. However, with the rise gender equality initiatives, women are now increasingly being supported in order to gain access to the financial world.
Women have also been growing in financial inclusion, but the gap between men and women is still persisting. Globally, we still have a 9%. In the case of Sub-Saharan Africa, we're actually talking from 0% in South Africa to a maximum of 10% in some other African countries. Certainly we need to focus on the issues that are particular to women to see how we can actually close that gap. And we need to focus on that issue going forward. And there might be certain things that are very particular to women, like mobile phone ownership. The mobile phone ownership is not the same thing for men and women. We also have a gap there. So we also need to address these type of issues, more infrastructure that is not only financial inclusion. We have to see the underlying problems.
The difference between the number of men that have access to financial services and women, the difference is usually around 9 percentage points in developing countries. So for example, in Nigeria, we have a program with Diamond Bank and Women's World Banking to bring women who run market stalls into the formal economy and not have to take time off from their work to deposit their money in the bank. They can do so using digital financial services. It's quite amazing.
Africa's promising demographics and technological revolution have set the stage for effective partnerships between the private sector and government in driving financial inclusion. For myself, Nozi Pombandra, and the CNBC Africa team from Washington, D.C., it's goodbye.